Fun. Hello, what's up, everybody? I hope that everybody can hear me both on YouTube and on Discord. So I'm Jay. I joined Titan and Penny Boys as a full-time analyst. I am 28 years old, and I've been mostly also like Jackal involved in crypto. This is where this is my love, because the way that I initially started out was I actually joined Penny Boys, and I was doing some equities just by myself, not knowing at all what I was doing, buying things, not setting stop losses. And I got into some stocks, and I actually lost quite a bit of money on that. And then I just basically set everything aside, but I was always interested in the whole concept of making money by trading. And then by pure luck, actually, in the summer of 2021, that was on the national holiday of Belgium, because I live in Belgium, my buddy was talking about Coinbase and how you could earn like some money just by doing some random quizzes. And at that time, I was working as a full-time lawyer, and I just had a little bit of money saved up. And I was just like, well, let's go ahead and I'll actually buy some of these cryptos. So I got like super lucky there buying the bottom in the summer of 2021, and then obviously made a whole lot of money on that bull run. And then once we were coming down, I realized like, yeah, I have to change something here if I want to continuously make money. It's not a guaranteed ride to 100K and up only. So I got to really start learning about how to trade. And then I was interested in crypto more than in equities, because that's where I basically recovered my losses from equities. So, and then I got involved in Titan Trading, because they are the crypto service and server of Penny Boys. And I got started talking with Amy and Jackal, and I was sharing some of my charts and ideas, and they basically liked it. And ever since, it's been a good ride in Titan. I would say it's been a great year. We've been making a lot of money over there, and that is also done primarily by shorting the markets and just by leverage trading with Jackal. So what I'm going to do here for you, hopefully, is I'm going to give you some outlooks on Bitcoin. This is also interesting because we're basically in a Bitcoin miner capitulation phase. So that's kind of what we've seen also in the 2018 market crash. Is like the last phase of a bear market is usually where the miners start collapsing and going bankrupt, and there's a whole lot of FUD in the market. So it's interesting to have an idea of where Bitcoin is going to go, because I also expect that miner companies that will stay alive, maybe Marathon and so on, there's going to be great opportunity on those equities as well. So if you have a good grasp on the crypto markets, it's also rather easy to make money on crypto related stocks like those of Coinbase or the miner companies. So for Bitcoin, it's been a good year, and I would say it's been a good year primarily because we've always had a good grasp on where we were going to go. So there's a couple of tools that I always use, which are the FIB levels. I've heard a lot of analysts today talk about like trading mindset, like swinging bull. I think he touched every point there. So what I want to do is just show you a couple of simple tools that you can use to really elevate your charting to the next level and make it so that you're kind of informed as to where you're going to go to in the macro scheme of things, and like the bigger levels that are important for you to really capitulate on and like make money. So one thing that we've been using, and this is something that you can then apply on any chart, like I'm going to do Bitcoin here now, a little bit of an analysis on Bitcoin, but I trade Bitcoin and I chart Bitcoin like I chart like blue chip equities like Apple and Google and everything. So the process is pretty similar. I'm mostly just looking at FIB levels and support and resistance. So for Bitcoin, ever since we put in that top in November, we've basically had a lot of people calling for 100K and up only, but then we saw a vicious move down here, a first wave down. Well, if I use my trend-based FIB extensions, that's first move down here. That's an important first move because that's basically the first leg of the downtrend. And then we had that dead cat bounce lower high to 48.2K, where we then basically have seen down only from there. So back in the days when we were here already, we were laying out these FIB levels, and when we were coming to 30K and so on, it was already projected in the charts that we were going to go to 18.8K just by simply playing these levels here. We made a lot of money just by knowing that this is also a good place to look for bounces, for example. Even in a downtrend, you can make money by longing the market if you get your entry at a good support level, and those FIB levels helped massively in identifying that once we lost these lows here in the summer, we basically knew, oh, we're going to come to the 1 and the 1272 and maybe even the 1618 fips here. And then we just saw this red line. And then here back in June, we made a lot of money because this was just a clear shorting opportunity. And then we knew, okay, 18.8K, that's the bottom for a while. And we've been bouncing on this fib level for a long time. So basically what I'm looking at here is potentially another move down. And so I have two more fib levels here to the downside where potential, like if we come there, for me, it's a no questions asked that I'm a spot buyer there at those levels. I've done my research on Bitcoin. I believe very well that we're going to go to 100K at least in the next run. So my whole goal here is to accumulate as much money in Bitcoin that I can for basically take off in the next bull run. And I believe that we will actually 10x from wherever the bottom is going to be in this bear market. It doesn't feel like it. It never felt like it in the past, but we're going to see that 10x again. So if you have good accumulation levels, you're basically good to go. So for Bitcoin, levels like 14.6 and 11K are just on my radar. And if we move down there, a lot of people, they're so shocked and they see everything red and maybe they have some investments in crypto, but they're basically holding the back, not knowing where do I get out, where do I buy, how do I approach it so that I can actually make some money off of this. So I would say Bitcoin coming down, it's all opportunity. Now, if we take a look at the current like price action here for Bitcoin, there's basically a couple of scenarios, and I'll just remove those fips to make it clear like what I'm looking at and how I'm planning to make a good amount of money. So these lows here in June are very important. We've basically lost that wick low and we've turned it into resistance twice now. So there's a couple of patterns here into play that are also going to tell us like where is this potentially going to end. So if we draw just a support line there and a very simple resistance line to these lower highs, you can see this is actually a big descending triangle that we've broken, and then we have a measured move from that triangle from the top to the bottom. Like if we paste that move to wherever we had our bottom here in June, then this is going to be a capitulation target. And then if you come to that target, which I'm going to draw a line there, people are going to be selling that bottom. And if you do it right, you're going to be buying that. So that's also a level, of course, we play both sides over in Titan Trading. That's also a massive level to then short the price to if we see certain things happening here. So one thing that I also like to use, and this is like my primary tool, is a fib retracement tool. I'm on a logarithmic chart always, and I basically just pull out the fib retracement from this move here. This summer rally, this bear market rally is going to give us the information needed to determine where we're now going to come to. So we were having this bottom and then this stop at 25.2K for Bitcoin. Now, if we draw these fibs, I always say if you lose that one fib, your previous swing low, then it's basically bear market confirmation and you're going to have another impulsive drive down. And then just simply by looking at these levels here, the 1272, the 1618, and the 2 fib, if you come to those levels, like we've done that in Titan as well, plenty of money made here on these bottoms where we're basically getting back above that major 1272 level. You know that there's going to be some pressure to the upside, and even just a move like this, you play that twice, there's a lot of money to be made both ways here. So targets that I'm looking for and really like the massive opportunity for Bitcoin is for me here at 12.3K. I think that there's two very good reasons why the price could come there. It's the 2 fib from this move, and it's also like if we paste this measured move target, that lines up just exactly perfectly. So it's basically in the charts, two things are pulling us down basically to that level. And then obviously I have a 1618 level here at 14.1, which is the 1618, which is actually like the golden ratio from this move up. These are just bounce areas where you will see a lot of buyers coming in, and that's where I'm personally looking to short it to and also to accumulate spot down at these levels. So I would say if you're interested to make money with Bitcoin, there's a couple of things that I'm personally doing, and that is I've bought at the 1272. If we come down lower, my personal trading plan is to buy twice as much as I bought there. If we come down lower, my trading plan is to buy twice as much as I bought here. And I trusted this enough to the point where this scaling in plan will be a very good entry leading into the next bull run. That's kind of the levels to the downside that I'm personally playing, and you can just look at them and take that for what it is. But it helps a ton if you know basically where am I going to go to, because I see a lot of people, and I think one of the primary mistakes, and it's also not really talked about that very much, is but people are trading way too much on the price. You are coming to the price. You always want to let the price come to you. If you are always eager to trade and you're like always struggling day to day and you're getting in trades with market orders, or you're just coming to the price, entering both long or short, it doesn't matter. You're kind of just coming to the price, and the way to really turn into a profitable like trader is to let the price come to you at major levels and just act accordingly at those levels, and to just have a lot of patience. So those levels to the downside are crucial for Bitcoin. And the bottom confirmation, I think we can say that the bottom is in for Bitcoin if we get the daily candle close above $21,500. That's where I think this red trend line is going to be broken, and that's very likely where we're going to see that this at least is a very significant bottom going forward. So the reason for that is basically it's our last lower high here that brought us to these lows. So if you regain that area there on the market with a daily candle close, maybe two above 21,500, then it's going to be a lot of pressure to the upside. I would say the move from 21,500 to at least 25.2 is kind of imminent at that point. You can look for long positions and spot buys up there or down here. So that's basically my point when I say you don't have to come to the price too much, let the price come to you. Well, if you have an informed vision on Bitcoin and a plan to the up and downside, you can act accordingly at those fib levels to the downside. You just know, okay, those are basically buying opportunities, and those are areas where I can take profit on my shorts. Or you let the resistance break, then you don't end up being already in positions in here if you're not comfortable for that. So I'm just giving you kind of two good entry areas for Bitcoin in my mind. That is above 21,500 for a vicious move up, or down here at 14.1 and 12.3K. So that's what I have for Bitcoin. I don't know, Jackal, what do you think about Bitcoin and where we're heading?
Yeah, I mean, I still think we're gonna hit lows at around 9 or 10,000. Then I think from there we'll probably slingshot back. Um, I, yeah, I think what you're saying is all. I said it in the chat, something about poetry. This is great stuff. And it's hard to disagree with your technical analysis just based on historical. Um, Historical patterns, and just how you're always so spot on, as well as I just am also I just think we're heading down to about 10K before we rocket back up to probably 20. Then we'll retrace a little bit, then back up to mid 20s, and then at that point, I believe by then we will likely have some catalysts coming in, the XRP case and whatnot. Um, so, coming from that, I personally think that the future is bright for crypto, but not after a little bit of a rocky beginning here over the next near future, and probably at least the first 3 or so months of this coming year.
Awesome. Yeah. And then there's maybe one thing more that I want to kind of show you here, and I'll just take this chart as an example, but my main watches are not only Bitcoin, it's also I'm watching the SPY a lot, because that gives me a good idea of where the market in general is going. And I also look at like Forex even, and some commodities like gold. Like I think it makes sense to have like a broad field of interest, because really there is a chart is a chart. And it's also one thing that I will say is I think that many people lose out on making money because they are becoming too emotionally attached to the underlying assets that they're investing in. And that's definitely like a mistake, I would say. Like, you don't want to be too married to the idea of, oh, this is my Apple stock, or oh, this is my Bitcoin, or oh, this is my gold, or oh, this is my such and such currency, because you just always have to play what is in front of you. And if you have like a wide range of what you're looking at, and you see where the money is going in the market, and you see that there's opportunity in oil, and maybe you can trade that during a certain phase of the year. There's always a lot of money to be made in any kind of market, and just like looking at different things makes a lot of sense. But one thing that I'll also like kind of show you here, just an idea, just like a trade idea that I have for Bitcoin here, and I'm going to show this to you, but it's the same thing on the SPY, and it's the same thing on Apple. It works the same exact way. So basically, in a downtrend, like we've heard it a lot, you hear everybody here say you got to play the trend, and that is absolutely true. That is probably the most important rule in trading, is that you have to come to like a daily and a weekly time frame. And if you see that you are creating lower lows and lower highs consistently, and you're holding something and you're so emotionally attached to what you are holding, be it a stock or a crypto or an altcoin, like doesn't matter. Like you got to become kind of robotic in letting go of what is not serving you in the quest of making money. And if you're holding something, and I've heard it say here before also, if you're holding something and every day it feels like pain, then you shouldn't be in it in the first place. But what I'm looking for here on Bitcoin is a downtrend, basically with lower lows and lower highs. So we're still downtrending. And if you just look at, for example, the use of a fib retracement tool, and like on any chart, and especially on the higher time frames, that's so valuable to basically, again, let the price come to your area of interest and play it from there. Well, if you look at this high and this low, you can take a fib retracement back to this high from that low, and you see 618 met, and you get a hammer down, and you're basically, well, if you know how to play a trend and you're having an impulsive move down, you basically want to short the retracement. And then where are you looking? At the 618 fib. So that's there. Next leg down, we have another high, another low. You take the same fib from the high to the low. We pumped a little bit here above the 618, but ultimately, if you would have shorted that and you put your stop loss somewhere at maybe at the 786 fib, you don't get stopped out, you get that other impulsive drive down. So we've basically had what I would say a 618 rejection here, a 618 rejection here. So right now, what do? Exactly the same thing. We take a fib, we go from the high to the low, and already I'm also watching the price come to me here at the 618 around 19K, because if we then add in a little trend line here, from there to there, connecting these lower highs, you can basically see that it would make perfect sense for the price to do something like reject here, then get people bullish again here, and then do it all over again, where basically you're looking for short entries here, and then you will see something like this until you get stopped out in a trade. And instead of that being like a frustrating experience, no, that is confirmation to you then that it is not going down. So I'm personally looking for a scenario like this. If we come up, like I have different scenarios and trade setups, obviously, but one major one on the daily time frame is retracing to 18,919K and then rejecting off this descending trend line and the 618 fib. Stop loss, I'm putting that at the 786 fib. And that is likely to work out. And then you get that other impulsive drive down here, impulsive drive down there, and then another impulsive drive down there. And then you're just in a good position. And if the price does something like this, right, where it stops you out, it's not that you're wrong there. You played what you had to play. And the fact that you then get stopped out at this area can lead into another trade idea, which is, okay, if I get stopped out here in my short, I'm not going to do anything, but I'm going to wait for a pullback, because then my stop loss is the confirmation that I need to know that I'm actually uptrending from there. And then you just take your other trade, and then that trade is going to lead you to the touch points of this trend line. And a trade like that, just having a plan, I'm going to short it there, stop loss there. If that doesn't work out, I'm going to wait for a pullback and long it there. And then if the first trade works out, that's great, you make money. The second scenario doesn't even come into play. But if your trade gets stopped out, you're still very likely to make money in the process of then going up. So that's kind of what I'm looking at for Bitcoin here in the next coming days and weeks. It's either going to do this, or we're going to have some more trouble here locally to get back there. And then I'm also looking at like lower time frames and lower highs here in this area to basically short it again. So I'm definitely not trying to prove that longs are right in a market like this. It's been down only the whole year. Like there's nothing to prove longing this, like unless something drastically changes, you're still in a downtrend, in a macro downtrend. You're always going to be better off if you stick to then the short bias and looking for short entries. And again, not going to a 5-minute time frame and shorting it right from here. No, zooming out, going to your daily and weekly time frames and letting price come to areas of daily and weekly interest. That's just a massive tip that I would give, and that works on the SPY, that works on equities, that works on Bitcoin, on altcoins. It's just having that plan ready. So that's what I have. Jackal, if you have anything to add.
No, man. I mean, it's great stuff. Yeah, you cover it all every time. I see top just scalps. CENN for 28%. That's a crazy scalp.
That's awesome.
Congrats, Top. In stocks, but if you're listening, congrats. So, but yeah, I mean, Jay, how about this? Let's take this a different direction. Jay, I'm gonna ask you a few questions. Give me, be as technical or as broad as you would like.
Yes.
Do you actually believe that Bitcoin will be a legitimate method of currency? At least in some capacity in the world. At least a little bit more than it is now. I know like, you can buy certain things. There are certain shops that accept it, but where the majority of stores or establishments will accept it at least to some degree. Do you think that will actually be the case someday, or do you think this is just a good way to make money now and in the foreseeable future? Next 5-10 years.
Look, this might be kind of shocking, but I'll be brutally honest. I really don't know, and I actually really also don't care, because for me, it's all about like being very familiar with this asset in particular, to the point where you can just make money out of it. And then if something happens macro wise to the point where Bitcoin is not going to be it, then I'm not going to marry my bags of Bitcoin. I'll just get out and short it to zero, while in the process of it then collapsing. Like really, truly, like for me, it does not ultimately matter as a trader. And I very much also, by having been like in quote unquote investor and trading, I very much prefer the trading aspect. I'll just play it to the downside as I play it to the upside. I just believe that it's going to bull run again, but that is based on technical analysis, and is based on like just how the chart is looking to me. And all the news that is coming out and this and that is all not important to what that chart is telling me that ultimately it wants to do. Ultimately, this thing, like, it wants to, if we just really go to the monthly time frame here, for example, for Bitcoin, because you got to kind of zoom out to just really understand the broader picture. This is something that has been around for what, 10 years, right? And it's been a bull run ever since, and you're confirming higher highs and you're not making lower lows here on a monthly logarithmic time frame. To me, that looks like, if I'm just projecting that in my mind to the future, I can see how this is kind of one of those epic bull run charts like you have in equities as well, that is just like blue chips for decades on end. I definitely believe that it is possible, and it is interesting for me enough to play this chart, really to stick with it. Like, for example, a lot of knowledge is just gained not from being on the 5-minute, but by being on a monthly time frame perspective here, and also using FIBs. Like, when we had the top in 2017, and I do this on the SPY and I do this on the NASDAQ and on the dollar, I trade and I chart primarily first. Always, I look at the decade long or the year long trend of what is going on there. Like, for example, here, if you had this top in 2017 and the bottom here in 2018, you already knew that you always, if you break the 1 FIB, you come to the 1618, you're on a logarithmic here. That is just what is telling you that you got to get out there. That is what the technicals already told you here. Once you broke the 1 FIB here, that in the month of November 2020, you could have already very well longed it just to this exact level and got your shorts in there, because that is just a level that is the golden ratio from this year-long swing was there. And now my message to everybody here is that what I believe that this charts want to do is that it wants to do the same thing in the next bull run. there's going to be a next halvening. It's like written, coded in the DNA of this chart that that is what it wants to do. So again, just like you can hear the top of the next bull run, you can just know it by having your 1 fib there. And then if we make just a mental experiment that we've seen the bottom, which again, we don't know and also don't think that that is the case. But if this is the bottom and this is the 1 fib, then ultimately what this thing is going to do is maybe drag on a little bit. But once it breaks through 69K, which I really believe it will do, and that can be in 2 years, 3 years, 4 years, 5 years, that doesn't matter to me, because I can also make money on a 5-minute time frame just by scalping it, because then you kind of learn to do that. But the macro view for Bitcoin is that it is going to these 1618 and 1272 levels in the next bull run. So that is going to be 103,611 and $173,787. Now, the crazy thing here is that actually short term, if you're coming down, it feels awful and it looks like everything is extremely wrecked. But let's say that we come lower here now in this bear market, and we maybe, if just by looking at the monthly time frame, yeah, you would already just see the red candle here that basically preceded the big run there. That is going to be an extreme area of value. That is a monthly level of demand, where also, of course, that is where a lot of support is going to come in. Well, if you come lower here now in the next coming months or so, and you take these fibs and you're like on that macro time frame monthly perspective, if you come lower here, say we come down and we test like 11.6K, what you will see is that your bull run highs become higher. That's literally how it works. Like, unless we lose the lows here, which then confirms that we're no longer uptrending. So that is ultimate confirmation that it's over for Bitcoin in my mind, is just if you ever lose $2,900 again and you turn that into resistance, then you really change something like macro wise to the chart, because then you're not making higher lows anymore. So that's, and I don't think that that is what it wants to do. I think that what it wants to do here is shake out as many people as possible before ultimate takeoff in the next bull run. And then that could be it, or then it could keep going. But like, I'm just here to tell you that the lower it goes in this bear market, you can literally see it. I'm changing my fibs here. The higher we find support, well, the less lucrative the bull market targets. If we come lower, you're gonna come higher. That's just how the chart works, and that works also on equity. So that's Bitcoin, like macro perspective there. Like, if this is the low, you're gonna come to $173,000. At that point, everybody is going to call for an easy 200K, 300K. And then, oh, I'm actually at a 1618 on the monthly time frame. Let me just go ahead and take my money there, because you've been accumulating at lows. You're basically here and here and here now. You're basically in that downtrend action. You, like, we've seen it on Bitcoin before, right here. We're down 87%. It's over. Here we're down 84%. It's over. Here again we have a drop of 72, 73%. Again, it's over. But right here we're again down already 77% from the top. So this is kind of accumulation area where, to me, you're somewhere here or here. And then whether you really realistically buy in at 14 or 12 or 10K, that is not going to matter that much if you have that long time frame perspective. So in that regard, I kind of agree with what Michael Saylor would say, is that it's just gonna go again. And like, yeah, it will probably do that. So right here on these red candles, you just gotta zoom back out. Like, again, if you're making losses, especially, this is also a big one, if you're like always stuck from day to day through daily life, and you're always like in your head on the 5-minute time frame, and you're just like trying to make quick money, you completely lose what is actually going on. Like, it's like if you zoom out to the monthly and weekly time frame, you turn into this like meta perspective of what is actually going on. And then all the news and the little events here and the liquidations, well, it's all not really that relevant. You just have that technical point of, okay, this is the high, this is the low, this is where we're going to go to in the next bull run. And at lows, I want to accumulate, and I definitely don't want to sell my my spot Bitcoin really here. Or if I sell it, then I will quickly buy it back at the lower level, but that's then just considered a trade. So that's Bitcoin. I kind of think, and that's also why I'm focused that much on it with my like personal what I personally do, I am mostly 90% is in crypto. And again, that is because crypto kind of did it for me in the first place. Like crypto has like worked for me, not and much more than equities. So I'm just sticking with what is working for me the most, and I kind of would suggest that everybody does that. Like that's kind of macro Bitcoin, and that's how I think that you're in opportunity territory here. And then that will also, of course, all the minor companies, for example, Marathon, we can take a look at that. All the ones, and again, you don't necessarily want to buy a falling knife when it's only coming down, 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 down. You are okay. It's okay to wait until things turn around again. But really, Marathon here, for example, I'm not completely sure, but I guess that they will be fine. And just by looking at the chart here, I'm looking at also on a monthly time frame. So instead of trying to force something here day to day, I'd rather be patient and have like a big level set up here where I know that that is a buying opportunity for this reason, that it's a monthly area of demand. Like for example here, like again, like if you look at this chart here, this is kind of a bullish looking chart to me, like macro perspective, until we lose lows here. Like I think what we're doing here is just we've had this low at 35 cents and we came all the way up to $83.45. Well, what I would look to do there is just I'm looking at my 618 level here, just like I was looking to short the 618 on the Bitcoin daily time frame. I'm looking to long the 618 level here on the monthly time frame on Marathon. And what do I see? $2.84. It's making its way there. It's also a monthly area of demand. So at the very least, what you can expect here is that you're going to be good with some bits at this level. And definitely if Bitcoin recovers and if crypto does well, a stock like this, holy moly, there's a lot of percentage potential here. This is went from 35 cents to $83.45, and it's coming down on the logarithmic scale to a 618 FIP, and we're like approaching here. If this doesn't go bankrupt, this is going to produce like insane potential also. Like just the bounce back to these highs would be like 2,650%. Like that is insane. So, and from there on, like you do that on the monthly time frame, then you go to daily time frame. You put it again, you're just zooming out, and what do you see on the daily time frame? Oh, that you're coming into like this massive block of monthly demand where you would probably want to be part of it if it doesn't. And then obviously just when you're trading, and even if you're an investor, like personally, I'm not a fan of investing into something and not setting a stop loss on it. I can't even fathom doing that as a trader. Like whenever I get into anything, it's like even an investment, there has to be some kind of stop on that in my personal opinion. So the way that you do it is you just look at that monthly level, you go to your daily time frame, and then you just cover your risk. Your risk reward is very important. It's never a problem to be stopped out of something. If you play your play and it doesn't work out, then that is okay, but you can never risk more than at least like 2-3 times what you want to get way more out of your risk. Like if you're risking $100, then you want to get 3, 4, 500 out of that risk that you're taking. And then sometimes you will lose your 100 because that's part of trading. It's inevitable. Nobody can tell you with 100% certainty what a stock is going to do. It's just impossible. Like you can only determine macro levels and then go to it on the micro time frames, and daily time frame is actually already micro for me when I'm looking at like it from a bigger perspective. And that's how you find your day trades. And then ultimately you see this monthly level here on a 5-minute time frame. You can quite literally wait until that comes there and then make money off of it playing the bounce there. This is very likely going to be instantly bought up, or if you see some action here and you see that you're holding this level here, 2.84, that's where you can definitely look for long positions, and where you can just like even a bounce to $3, $4, $5 is already almost 100%. So a lot of opportunity also in the stock market just by kind of having a grasp on the crypto market, I would say. That's just a quick one on Marathon. Have you done any fundamentals on that company, Jackal?
Jay?
Yes, I'm here.
Oh, you broke up on my.
Oh, I hope I didn't break up for anyone else.
I think it was just you said, have you done any fundamental, and then
On Marathon, on the company of Marathon.
no, it's not particularly special or um, nothing really strikes me as market disrupting, other than the fact that it's dealing with crypto, and obviously that's an emerging market, um, which is obviously a higher risk, high reward industry, and of course could could likely make you some good cash if things do go well for crypto in the future. That's a big if though, of course. So I mean, I wouldn't be putting my life savings into Marathon. I mostly trade Marathon with options and just on a technical level. So no, nothing particularly interesting from a fundamental perspective.
Yeah.
Um, However, that was an incredible response to my question about Bitcoin and I guess just crypto in general. Um, we have about 20 minutes left. I've got two more questions for you, Jay, and I can also give my opinion on them after you give your answer. But what risks do you see in cryptocurrency, and how do you mitigate those risks? So explain it to me as if I've never heard of crypto, or I'm just beginning to get in, and all I've read is that um, everyone has lost money recently.
So the first thing with crypto is like, sometimes I've told people like, hey, you want to make 100K? Yeah, all you need is like 14, 15K in a ledger. And it's just like, you got to buy your Bitcoin at a low level and wait, right? But the crucial part of the whole thing that I'm saying there is put it on your ledger. You got to take ownership of your crypto. That is the number one pitfall. And I would say there is no point even in trading crypto or in holding crypto if you do not first have the tools to take ownership for it, because the thing about it is that, well, you're actually, what you want is some store of value, maybe a payments network, but the whole point, what makes it so attractive is, for Bitcoin then specifically, is that there's a limited supply. We always know that there's not going to be more than 21 million, and the fact that you actually can take ownership for that asset yourself. But if you leave Bitcoin on exchanges, that is likely always going to work out not in. And there's many pitfalls into in leaving your Bitcoin on exchanges. It's not only the insolvency question of the exchange, but the way that exchanges are designed is to make you spend money and to make you trade, and to actually, if you're not completely familiar with how to trade, it's very easy to just by trading on an exchange to really let them eat up a lot of fees on your Bitcoin. So what I would say is, like, the first thing is, like, the way to do it is to take full ownership of your Bitcoin, get it off the exchange. And just what I do, and like a good way to approach it, like, this is a great like tip, is like, if you buy a Bitcoin, you have to have a ledger, you have to put it on there. That's kind of I would say you have to do that. And then the way that leverage works, the whole concept of leverage trading seems like so alien to many people. Well, if you have, for example, just a Bitcoin, right, you can put 90% of that Bitcoin on your ledger, take ownership for it. It's now completely within your control. And then you can leave maybe 10% of your trading funds maximum on an exchange to then trade with, if you so wish to do that. And that's where the whole question of using leverage comes into play. If you have 10% of your total amount of Bitcoin on an exchange, you can apply 10x leverage to that money and then trade an account as if all of your Bitcoin was on the exchange. So then leverage is just a tool to basically allow you, like, take ownership for your crypto and then come to the exchange with just a small fraction of your assets and apply leverage to that small fraction of the assets that you have to then trade with. And that's really going to protect you in many different ways. And also, one of the ways in that is going to protect you is, like, if only a small percentage of your Bitcoin is on an exchange, then at no particular point in time can you blow up everything that you have on just one trade. If 90 to 95% of what you have is stored on a ledger and you're trading leverage, and you have 5% of what you have on that, and even if your trade doesn't work out, maybe you really don't know what you're doing and you get liquidated, then all you can lose is at least what is on that exchange, and then you're still macro wise, I guess, good for what you have on your ledger. So your ledger protects you against yourself. Your ledger also protects you from the insolvency risk of exchanges, and that's the first thing that you have to do in order to get involved in crypto. Otherwise, you're really not taking it seriously enough, and you really will lose money likely, because there's many ways to lose money on fees, by exchanges going bankrupt, by not knowing what you're doing during a trade. So ledger first, then get your Bitcoin, store it on a ledger, and if you want to trade, small percentage only goes to a trading exchange, one that is reputable, like OKX or Bybit or Mexi or even Binance. With all the FUD now, I don't think that there's anything going on there, but really always have a small percentage of what you have on a trading exchange. And again, that protects you against yourself, because when do things really turn bad? It's usually not because you get stopped out of a trade or 2 trades or 3 trades. If your risk is managed well, that's still okay. Mainly when things go bad is if it frustrates you, and then you have access to too much power by having all your funds on an exchange, and then just by clicking on one wrong button and going in with all of what you have, you can then lose all of what you have, and then see that the price of Bitcoin then turns around, goes to new highs, and then you really just lose a lot of money. So ledger is vital if you want to make money in crypto, and that's just really the truth of it. Like, if you don't have the funds to get the ledger, then also you got to do something else before even thinking of acquiring any crypto, I would say.
That's a great answer. That's what I was going to say about the ledger and stuff. I think that is an incredible way to really just mitigate your risk, like I asked earlier. So, and then I didn't even consider answering with the leverage side of things to help mitigate risk, because it's usually not seen in that light, right? But it is true, right? You can have much less money, U.S. dollars, in your investment, and still reap the rewards as if you do have quite a bit of money in there.
Yes. That's the whole point of leverage. Is like, many people, it sounds so dangerous, because obviously if you say you buy some crypto and you have all of it on your exchange, and then you keep it there, and then you apply 100x 50x leverage to everything that you have, and all of a sudden you're playing with a position that is 50 times your total what you have in crypto, then obviously you're playing with just money that you don't have and that you cannot afford to lose. So that is not the way to approach leverage. Leverage is a way to lessen your risk. Not ever, like, leverage is never, ever used, if done correctly, to increase your risk. Like, never. That is not how it works. Like, if you're on Forex leverage and you have a 4% like stop loss, then you're going to risk 16%. So if you then just want to risk 1% of your account, you got to divide your whole portfolio by 16, and then that's only the thing that you can go in with. If you want to learn more about that, all about that in Titan Trading, like, everybody there is really doing a great job and really like taking like full control of their own trading. There's a lot of people that have joined and have really just taken control about their own trading, and that also cycles over to like stocks and options. So warm welcome and a speech for Titan Trading here also. That's for sure.
Yeah. Good, incredible answer. You're great. You're great at this. And we have just over 10 minutes left. Here, I've got a couple. Yeah, okay. Here's my question. My final question for you. Then we can also. Yeah. Well, I was going to say, and then we can open up for questions. But obviously, this entire time, you guys can just send questions either via DM or the live stream chat, and we will answer them ASAP. But my final question for you is about regulation. What are your thoughts on the current state of regulation in the cryptocurrency space, and do you think it is sufficient to protect consumers and investors? I know you briefly touched on this with the ledger stuff, you want to get your money off of an exchange, because once it's off an exchange, it is really yours. The exchange can go under, and you will still own Bitcoin. Um, so, is there, what are your thoughts on the current regulation in the cryptocurrency space? Do you think there needs to be change, or do you think this is nothing needs to change, and this is just a way to weed out the bad projects? What are your thoughts in 12 minutes or less?
Well, I think that many people that are like attached or in crypto and that are very like emotional about it, they say like, oh, we get away from the banking system, and it's like, yes, that's true, and that's also a good thing. But that is not to say that there's only bad things in traditional finance and banking, specifically for consumer protection. Like, I'm not sure 100% how it is in the United States because I live in Europe. But for example, if you have deposits on a bank up to 100,000 euros and the bank goes under, well, then there's this deposit fund that will refund you up to 100,000 euros. Well, I think that's a good thing, right? That there is some kind of mechanism in place to the point where if someone that is kind of controlling your money and that fucks up or that messes up, excuse my language, that you at least have kind of certainty that your funds are going to be returned to you. That is completely absent in crypto. There is no kind of deposit guarantee in crypto. So I guess if they could work out a method where, yeah, for kind of retail of consumers or anything like deposits up until like 100,000 USDT, just to give an example, are kind of like refunded if an exchange goes down, because like exchanges could be seen as banks, right? They are then the ones that are in, and that's also the reason why I'm so like passionate about the ledger, because really, if you're in crypto and you think that you're getting away from the banking system and then you buy Bitcoin and you just keep it on an exchange, that's kind of cringe. That's not getting out of your old habits at all. Like, the whole change of it is that you then take ownership of your own assets. So if you leave them on an exchange in the first place, that's kind of the same thing than if you were to deposit money in a bank. In my opinion, if something happens to the bank, you kind of have this benefit that you have some kind of protection if the bank messes up. And to the point where with exchanges, that is completely not the case. People in FTX having tens, hundreds, millions of thousands of dollars in there, then lose it all overnight. And where do they go to? They have nowhere to go to. There is no regulation in place. So I'm not against regulation at all. If it can help to protect people, then I guess that's a good thing. And that will also then lead to probably having a bit more trust. People will feel more secure to invest in something if they know that there is some kind of mechanism in place that will protect them if something goes wrong. I think then people are going to flood in more money into it, driving prices higher. So I think regulation will probably be one of the, like, it seems now like the regulation will turn it to zero because you see the prices coming down. But if you zoom out, you will kind of can know that regulation might be the big expansion factor for the next like bull run that drives in a lot of money, and then institutions get in and everybody gets in, and before you know it, you're up there again. And then you're like, oh, I missed that 2020 2023 moment there. Oh my god, it was all so cheap. And now there's regulation and there's a Bitcoin spot ETF and people are feeling secure about it, and now I'm buying it at a higher price than my neighbor. And years ago I wasn't interested because it all seemed so bad. Like, I think regulation is probably going to drive prices higher, is what I think, and it's required also.
Yeah, I would agree. I do think that regulation will drive the value of crypto, the market as a whole, upwards. But as someone that really does agree with the crypto philosophy of no third party banks, blah 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 blah. Um, Now, I said agree doesn't mean I necessarily believe that that is going to be the case in our life. With crypto being the standard. But I do agree with the philosophy behind it all. Um, I do think that regulation isn't the best thing for the space. I think it is the best thing for the space in the near term, but I think long term, I do not. I do not agree with extended, I guess, regulations and whatnot. Rules regarding crypto. I think it needs to stay, a little bit. It needs to be the Wild West a little bit longer, until obviously there will be some evolutions and adaptions, and people will figure out that, okay, if I'm being offered 25% APY, it's probably not sustainable, and could even collapse, and I could lose my money. So I think that there's just a little bit of a learning curve. Survival of the fittest, I suppose. But I do agree, if we are to have a safe environment for the near future, and if you are looking just at it from the perspective of an investment and I just want to make money rather than a I don't know. I mean, I want to say lifestyle, but that sounds really cliche, really salesman-y of crypto. But I digress. So yeah, that was a great response. Thank you. Are there any final questions? We have about 5 minutes, and then we will be doing a roundtable with almost all of the analysts. I will not be in attendance as, like I said earlier, I'm in Thailand and I'm staying in a hostel, and so at the moment I do not have Wi-Fi that is good enough to have me join the other analysts on our streaming service that we use. So unfortunately, I will not be showing my face there, but I will be back soon, and you will see me quite frequently. Top says second head and shoulder here on SIMT. That is normally bearish, but when right leg is higher than the left leg. Looks like in between the head and shoulders, and inverted head and shoulders. Bitcoin Jay and Jackal. If you have time, would you look, please? Jay, do you have time to look at SIMT? I am pulling it up.
Absolutely. I was looking at I was about to go on about crypto and about how I'm spotting some opportunity, but I guess you got to come check that out in Titan Trading. I'll look at what is the ticker that what we're looking at?
SINT. I believe it's a stock. 5-minute chart. Okay, that's what.
All right.
What time?
Okay, so 71% up for the day. You're currently running into 1-day resistance from this level. If you fail to get back above this level today, it's a swing failure pattern, and it's ultimately not that bullish, and you can expect at least a vicious pullback like we've seen on ICCM, I guess, today. So you got to get above a daily candle close above 14.5. This is a crazy pump, obviously, but if you get rejected below 14.5, this is coming down. So let's take a look at a lower time frame here, 4 hour. Maybe get an RSI in there. RSI has room. That's quite nice. Yeah, this is kind of the level to play here, and it already says something that you are wicking above it on this 4-hour candle and failing to close above. So I would say you got to get a daily candle close above this level. Look for bounces on. Like, what is crucial for this stock, like for any stock, is that it starts to build some kind of structure. If you break this high, you then got to find support on it to then move up further. Or else, what I would say is, if you see something like this and you're like, damn, I'm missing all of it. Like, what I would do is I would take a fib from the low to the high, and I would simply look at the 0.5 and the 0.618 as potential retracement areas. My trading plan is that if I see a pump, I buy a retracement, not the pump. Retracement comes within the 0.5 and 618 range here. Stop loss, and then for the stop loss with these fib levels, typically you have the 618 and then the 786. Now, what you can do is put a long on the 618 and a stop loss on the 786, but the problem with that is that I find it too wide of a stop loss. So what I usually do, instead of 786, I take 702. That's a fib that I've seen some very good traders use, and I just put it below there, probably below this wick. And then you play a way better risk reward than if you were to long it up there. Let's see on a lower time frame, 15-minute. You would kind of have to get above this line, I would imagine. Otherwise, this can come down to these support levels. So you gotta, if you want to low time frame, get an entry on this, probably go to 5-minute and then try and draw this red trend line. You want to get above that and fall back to it as support, and that's where you can then take an entry. I do think that reaching these highs again looks quite reachable, maybe double top there, but I'm not super bullish on it looking at the daily time frame. Like, you got to kind of push above 14.5 and hold it, because otherwise you're just running into daily level of supply. And that's also where a lot of money is lost, where people get in on something when it's already up 70, 80%. It's kind of the same thing, I think, with ICCM. Yeah, that's up, like, yesterday was trading above like almost $5. Today, that's 140. Imagine if you just buy that, hold that, and don't set a stop loss on it. So I don't know what is going on with Sint, but same thing would be true here. Like, I wouldn't be surprised if this tanks, to be honest. It's maybe also because I like to be the bear, but yeah, that's what I would have for Sint.
Stocks or crypto, Bitcoin Jay for you. Going on. It's just TA trader. It doesn't matter what it is. Commodities, crypto, stocks. You can trade it.
Give me a chart and I'll make you some money. And that's the whole goal of the premium, guys. Like, what I do, like, one last thing that I'll say is, as I said in the beginning, I first joined Penny Boys and I didn't really know what I was doing, and I was holding some things without a stop loss. And then ultimately I focused on working my real life job. And then I got lucky with crypto. And then, because it was such a great community and people, I always wanted to, like, come back there, and I saw Titan trading. But one of the first things that I kind of realized when I was a member is that really the value of a group, honestly, it is in learning to do things for yourself. It really is. Like, you can be in here only to take entry, stop loss, profit, and that is likely going to work well for you. But that is not ultimately what can change your life, I would say. What changes your life is putting in effort into something. So just a warm welcome, not to be lazy. And if you follow me, you will always see a chart. You will always see a call backed up by technical analysis. You will always see where my invalidation is and how you can do that for yourself. So that's that. I think the hour is done, and I see Amy is jumping in here, so I'll just cut it there. Thank you, everybody, for listening, and Jackal for being on here with me. It's always a massive pleasure with you, man.
Yes. Thank you so much, everyone.
Give us about 3 minutes, guys, to get all the technicals worked out of everybody else.